IFRS 6, or International Financial Reporting Standard 6, sets out how companies account for the exploration and evaluation of mineral resources. It guides companies in reporting financial activities related to finding and assessing mineral deposits like oil, gas, and metals. Issued by the International Accounting Standards Board, its goal is to ensure clear, reliable information about these high-risk, high-investment activities. Before IFRS 6, accounting varied widely, making it hard for investors to compare companies. IFRS 6 reduces these variations and provides a framework for reporting, while allowing some flexibility. Consistent reporting under IFRS 6 supports informed decisions and enhances transparency. Clear reporting reduces uncertainty and builds trust in financial statements. This standard is a key step toward global comparability in mining and energy accounting. IFRS 6 applies to companies exploring for and evaluating mineral resources like oil, gas, gold, and copper. It covers both large corporations and smaller ventures involved in searching for and assessing the viability of extracting these resources. The standard applies once a company has obtained legal rights to explore a specific area. Activities such as geological surveys, drilling, and sampling fall within its scope. IFRS 6 focuses on costs incurred during the exploration and evaluation phase, not before legal rights are secured. Once technical feasibility and commercial viability are established, other standards take over for development and production costs. This ensures a common reporting basis for extractive industries worldwide, bringing greater comparability and clarity for stakeholders. IFRS 6 allows companies to either capitalize or expense exploration and evaluation costs, as long as the policy is applied consistently. This flexibility acknowledges the diverse practices in the extractive industry. If a company chooses to capitalize, costs must relate directly to exploration and evaluation activities and be expected to generate future economic benefits. These assets can be tangible, like drilling equipment, or intangible, like exploration rights. Examples include costs for acquiring exploration rights, geological surveys, drilling, trenching, and sampling. The key is that these costs are directly attributable to finding and assessing mineral resources. Regular impairment testing is required due to the high risk and uncertainty in exploration. If the carrying amount of an asset exceeds its recoverable amount, an impairment loss must be recognized. IFRS 6 provides specific guidance for impairment testing, differing slightly from general standards. This ensures assets are not overstated on the balance sheet. The approach balances flexibility with the need for reliable financial reporting. Consistent application of policies is essential for comparability. Proper recognition and impairment testing protect the integrity of financial statements. IFRS 6 outlines which costs can be included as exploration and evaluation assets if capitalized. Major categories include payments for exploration rights, geological and geophysical studies, exploratory drilling, trenching, and sampling. Costs for evaluating technical feasibility and commercial viability, such as engineering studies and economic assessments, are also covered. Market studies to assess demand and pricing may be included if directly related to the project. Not all costs qualify. General administrative expenses and costs incurred before obtaining exploration rights are excluded. Once technical feasibility and commercial viability are established, further costs are no longer E&E expenditures and fall under other standards. The standard ensures only relevant, directly attributable costs are capitalized. This distinction is crucial for accurate financial reporting. Companies must carefully assess which expenditures meet the criteria. Proper classification supports transparency and comparability. Capitalized exploration and evaluation costs are presented as E&E assets on the balance sheet, typically as non-current assets. These assets may be classified as tangible or intangible depending on their nature. Companies must consistently apply their chosen classification policy. IFRS 6 requires disclosure of accounting policies for E&E expenditures and the amounts recognized as assets, liabilities, income, and expenses. Disclosure of impairment losses and their reasons is mandatory. Cash flows related to E&E activities must be reported, usually under investing activities in the cash flow statement. These disclosures help investors and analysts assess the scale and impact of exploration efforts. Transparency in reporting E&E assets and impairments is critical for stakeholder confidence. Clear presentation allows for better evaluation of a company's exploration strategy. Consistent disclosure practices enhance comparability across the industry. This approach supports informed decision-making by all users of financial statements. IFRS 6's flexibility in accounting policies can lead to differences between companies, so clear disclosure is essential. The standard specifies when impairment testing is required, such as when exploration rights expire or further spending is not planned. If a project is no longer commercially viable, impairment must be recognized. When technical feasibility and commercial viability are proven, E&E assets are reclassified to other asset categories under different standards. This marks the shift from exploration to development or production. IFRS 6 interacts with other standards like IAS 36 for impairment, IAS 16 for property, plant and equipment, and IAS 38 for intangible assets. Understanding these interactions is key for accurate financial reporting. Companies must ensure their policies align with all relevant standards. Proper navigation of IFRS 6's complexities supports reliable and transparent reporting. IFRS 6 brings structure and consistency to accounting for exploration and evaluation in mining and energy. It enhances transparency by requiring clear disclosure of policies, expenditures, and impairments. This helps investors, analysts, and other stakeholders understand a company's exploration strategy and risks. Consistent application builds trust in financial statements and supports capital investment in the sector. The standards guidance is vital for industries reliant on successful exploration to secure future production. By promoting systematic accounting and improved disclosure, IFRS 6 benefits companies, investors, and financial markets. It demystifies complex exploration activities for a wider audience. Trust and comparability are strengthened, supporting efficient capital allocation. Even as an interim standard, IFRS 6 plays a crucial role in global extractive industries. Its impact is felt in better reporting, greater confidence, and a more robust financial environment for resource exploration.